Good morning. Today is Tuesday, the 24th of January. It's Kylie and I'm joined with Joe.
Good morning, everybody. I've just come back to the office today. Been away over in Sydney for a few days.
Yes, happy holidays.
Actually, yeah, it was very nice. A little bit rainy, very pretty nonetheless over there. So apologies for no videos for the last couple of days, but we've got a few good questions today.
Good, excellent. All right, well, just as usual, starting with the All Ords chart, you can see we've clearly had a very, very nice run. We thought we might have a bit of a pullback at this level. We didn't. It moved sideways and off it goes, but you can see it's running out a bit of momentum. So we're kind of expecting a little bit pullback, especially coming up to Feb with the next meeting, bank reserve meeting. Anyway, we'll see how we all go with that. Now, I believe we've had some questions.
Yeah, so what we want to look at today is a few examples of adding to a rising position, if you can show us some of that.
Okay, all right. Well, what I'm going to use is an example using Darvas boxes because they set them up perfectly for us without having to do much thinking. So going into Darvas scan, leaving this as long, we're changing the scan period to 13 days. We just want to keep it short. This all stays the same. Top confirmation is 3 bars, bottom is 3 bars, percentage risk is 2%. So the only box we want to tick is in a box, any box. Then we're going down to filters. We're looking at range from 1 cent to $50. So we're trying to cover quite a bit of the market. Ignoring results that have less than 250 days of data. We're looking for results that have more than $100,000 that go through it and volume that has more than 40,000. So fairly simple. Scan, all right, and this is where we get some Darvas boxes coming up. Now, with a Darvas box, without going into too much detail about Darvas right now, that's not the point of the question, you can see that it gives us the range. This is what this box is here, and the percentage buffer, which you can change. This is literally your stop at the bottom here, and this would be your entry at the break of each box. So that's ideally what you're looking for in a very simple term with Darvas. Now the question is adding to a position?
Yes.
Okay, so let's just flick through and we'll find an example. BVS, that's left a bit of a gap there. That's sort of moving sideways. Interesting. Anyway, okay, let's have a look at this one. We've got 3 boxes here. You could argue that we've had a higher low, and then it broke here. It did gap up, but your first entry could perhaps be on this day, the 7th of November. So let's say you've put $10,000 into the market on this day. It moves up, and then we've got our first Darvas box, and it's moving sideways. Your stop hasn't been hit, and you then have a break of this box entry at, say, $4.40. So you could add on that break of that box there. Typically, if you've put $10,000 in, you would go half, so you put another $5,000 in. So you usually would then go half of your first entry into that. So you've added on that half the amount that you started with on that top of that break. It's moved up again, come back. You would probably, depends on what your trading plan is and how you've decided to exit this strategy, what your exit is. Yeah. Let's assume that you haven't. You've kept your stop down here. You've moved, and now you've got another sideways and another box has formed. So this time with this box formed, you'd probably move your stop up, and then you have now another entry on the break of this box. So then again, you'd go half of that half. So you started with 10, you'd put 5 in at this break, so you'd put 2,500 in at this break, moving your stop up. Okay, now we're in a situation where it looks like we've got another box forming here. You could now move your stop up again to follow this box, and your next entry would be the break at the top of this box. So always with Darvas, you're adding at the break of the top. And again, you've added 2.5. So really the question is, do you add in another 1,000 or do you let this run? Do you take profit? The question really is now up to you and what your strategy is.
Yeah.
That's how you can add to them. Then it's up to you on what you want to do if you want to add more. So let's see if there's another example. DDH, this is, in all fairness, it's had a move but has been moving sideways really for, well, let's just say from September. Did go down, but you're finding this resistance at 95 cents. So you'd like to think that if it broke this box, you'd have your stop set up here. Now you then determine whether it will find resistance at $1, and if so, does another box form, and then you buy at the top of that. Looking forward, so you need to work out whether that is going to fit your strategy. Same with FMG. This is giving us opportunity. You could almost argue your first break was the break of $20 here. You had resistance and it's breaking. It's moved sideways. It didn't form a Darvas box, but it's forming one now. So do you now wait for the break of this, moving your stop up to here? You can add half on the break of this box. If that's making any sense, you've really got to work out what you're starting with, what your risk reward ratio is, and how much you can afford to add in. Then LSF, they're all the same. These are giving us all opportunities. You had a buy here, but it did gap up, so you potentially would have left that. We don't. If it gaps up, we'll let that run because typically it will come back and fill. It hasn't at this occasion, so now we're looking forward now. We're looking here going, okay, do we buy the break of this box? You've got solid OBB going up into a Darvas, which is always really great. And while it's in a box, you want to see solid just OBB moving sideways, which this stock is doing. MRM, another example, it was a really great entry on a break of 8.5. Unfortunately, it gapped up. So again, it's now, probably would not have got in on this gap. Again, it leaves it here. The way that it's behaving, though, looks like a bit of a takeover. So I'm not sure what's happening with this stock, but it is behaving in a peculiar manner. So again, the question is now, do you look at buying the break of that? Probably look a bit into that company, see what they're doing. Same with this one. PNV, I actually have had a box drawn around this as well. It's not a Darvas, but now it's forming a Darvas box. It's given us entries all the way up. If you've missed it, here's your chance to have your first initial entry. Same thing, keep an eye on it and whether you want to add or just take profit once it's reached your target. PRN, exactly the same. You've actually got an entry down at 80 cents. It's given you another one at $1, another one at $1.15, and now we're looking for a break at $1.35. So I don't know if that answers the question.
Yeah, there's some great examples. Good way to use Darvas Box as well.
Yeah, I would. With Darvas, the general rule is always you're buying on the break at the top.
Yeah.
And your stop is at the bottom. And it's pretty simple. In the meantime, you let it just run its course, running sideways.
Yeah, excellent. Very good. Thank you very much.
You're welcome. Have a play around with Darvas boxes. They are fun. They do all the work for you. And another really good thing is what happens is after a scan, these Darvas boxes actually will disappear. So if you do want to keep them on your screen, you need to go to the trade visualizer, click on that, and then you can actually draw your box on it. So you can kind of mirror what that is. So then when the box goes, you've got a
stick that in your watch list, and but you'll
stay
know
there.
why it was there. Excellent. Good point.
Okay,
great. Thank you very much, Kylie. As always, questions through to me, joe@protrader.com.au.
thanks. Chat to you later.